Okay, let's check out some backtests. Now, I'll put a link to the original show where we discussed this concept, but I wanted to just look at a few different varieties because it's kind of interesting. We will also model this later so you can see kind of what the model looks like. But what we're doing is on a low orb, so a low breakout, a breakout to the downside. What we're doing is we are entering a split strike butterfly. More commonly, people may call these broken wing butterflies. So this is a butterfly. It's typically done for debit, although in higher VIX environments or lower VIX environments, wonky VIX environments, you may be able to get it for a credit. So this setup here, you can see back during the Liberation Day era when VIX was higher, it was a small credit, and it is buying a call that is essentially 5 points above the current strike. It's selling a call that's 15 points above. It's actually selling 2, so you form a call ratio spread, and then you are turning it into a butterfly, a split strike butterfly, by buying a long call 15 points above that. So what happens is, again, it's a small credit or a small debit, and it wins if it pins the short strike, and it can also lose. As we see in this example, it loses to the upside. So not only did you have to pay a debit to open the trade, you had to pay a debit to close it. So it can lose both ways. However, as I mentioned, if you find an environment where you get a credit to enter it, it can also win both ways. Here's where it won. So what's interesting about this is you can change the context of the split strike very easily. I'm going to show you that. Let's finish talking about this setup. So it's every day but Wednesday, and we are using exact strike offsets, of course. Now, I've changed a couple of these values from what was on the show just to make them rounder numbers. As I say, almost every video, this is not for copy trading. Make your own backtest. This is a starting point. I just made the allocation a round number of 15% on 100K starting, probably more than you'd actually trade, but it will let you feel this 47% nasty drawdown. And then I put a VIX max of 30. The original show had a little bit more specific numbers on both of those. So in the interest of D-curve fitting it, I just made them big round numbers. And we have 15 cents entry slippage. So that should be a healthy amount. Because this is a ride or die or a hold till expiry, there is no exit slippage. I've also got just the basic fees. And the Punisher is looking pretty thin because all we're doing is entering it and then holding it. Okay, so we're at 67.50. So this test had 2 calls since it's a fly, 15 above, 10 below that, and 15 above that. Let's click on chart. Here we go. This is exactly what we wanted to see. So we pay a debit for the trade. And keep in mind, there is not a low orb breakout happening right now. I'm just modeling the structure. This gives you the exact example as you move through time, how this butterfly works. You can see the closer you get to expiration, it just depends where you end up. So because it costs a debit, it's got a minimum break even to the upside, but also has a maximum break even to the upside as well, because it's a split strike. And if you look at it, you can see that if we go to the max value at the end of the day, you'll see this is our debit, $164 or 167 as it's updating, minus the $500 that you would get from it finishing past the long call. Again, this is what it looks like on a model. You can see you got to get to the zone, but you can't get too far past the zone. Otherwise, you will get blown out to the upside. So there we go. Back to the backtester. So what's interesting is if we change this last number here, right now, our max debit to be paid to close the trade was 5. If we change that bottom number, you can see what it does to the backtest. And again, the structure of this trade is super interesting. So when the orb gets broken to the downside, and most people think of an opening range breakout as a breakout to the upside. This is a downside breakout. There's not as many backtests, and I would wager to say there's not as many people trading opening range breakouts to the downside. This one changes the setup a little bit. So what we have is, because we are buying this farther out call, not only does that give us more risk, it is a cheaper call. So it also changes our entry premium. So what you'll see is those times when you got it for a credit, you're getting it for a more of a credit. and your debit is going down. That's interesting. It's a risk reward scenario. You're winning about half the time, but right now your potential biggest loser is more than your potential biggest winner. You can see the same trade cost less than it did last time. It's only 35 cents now, but got violated to the upside. So it was a full loser of 10. So we can keep going. We can make this even more of a split strike. If we go up to 25, what you're going to find is this premium down here gets even cheaper, but your debit or your debit of assignment at the end, if it's violated to the upside, is more expensive. And what's interesting, our win rate's going up, our MAR is going up, and our max loser is going up. So here we are again. That test is that last example we had that we've looked at a couple times here on Tuesday, September 30th, keeps getting cheaper, but look, the debit keeps going up. And as you can see, as you scroll through the trader log, you will see more and more trades for credit. Again, why is that? Well, this call that we're flying off the top is cheaper and cheaper and cheaper. So what does that do? You pay less every time. I bet if we make that 30 wide, this one on September 30th is probably going to go for a small credit. The risk of that again with a split strike. Here we go, 15-cent credit. But look, we finally had a call that didn't get reached on the top side of that one, okay? So it still cost you, this could cost you up to 20 to close. Yeah, this could cost you up to 20 to close. So you can see that you still have a target area and you're going to have more for a credit on entry and you'll have more risk to the upside as well. So your target zone is the same way. And this is a really interesting concept because you can play around with this. If you wanted to make a bigger target zone, you could change this strike here. You could also change the buy the call strike. If you wanted to give yourself more room to the downside, you could buy this at a negative 15. That's going to completely change the setup. It's going to be a lot more expensive, and you're still going to have risks to the upside. I don't know how it's going to do. I haven't run this back test, but there you go. So you still have that upside risk, but you're going to have a wider target area. So this is a mean reversion play, right? You're thinking it's going to stop drilling, but it's not going to maybe go completely to the upside. So this is like maybe not mean reversion play is a bad name for it. You could call it kind of an exhaustion play. So what you want is you want that scenario. Like here's a good example. We entered, it was 55.12, and where did we get? We got just slightly past the short strike. You ideally want to pin the short strike, right? Here's 11.25, right? That's a good example. Here's another good example. This one cost a debit earlier in the year, but the short strike was at 30. You almost got there. So you got a nice credit. And again, this one, you can have big losers. Your max winner, because we lowered this, your max winner is potentially bigger as well. And your cost is going to be potentially more. That same September 30th that we just looked at for credit, by lowering it 5 points, made this a debit. There's a lot of ways to backtest split strikes. And it is really interesting when you start pulling the levers of the risk versus the reward, what you'll see, because this is this can be thought of as a premium selling play, even though it's a debit. There's a lot of different ways to think about these and a lot of different ways to set them up. I'm not sure which MAR we had was the best MAR. Was it this one? It might be this one. So this would be interesting to keep playing around with. And I can save this and I will drop a note. We'll put that in the comment box below if you want to play around with it. Again, very simple to trade, especially if you're automating it on OO. If you're interested in trading this live, again, I would tell you don't trade this live, play around with it, find your own strategy, but this will get you going. And watching these orbs, to put on manually is kind of a struggle. I did it for a long time and it's much easier with an automation platform, but this is one that you can play around with. Thanks for watching the video, like and subscribe. And if you're interested in more options content, check out the OO show right here on YouTube.